The latest 5-minute time frame strategy with a robot. The banking strategy on Ripple 5-minute time frame. We want to backtest the past couple of days together to see how it performed, and we made a profit. And also had a drop, but before that, let me show you the open trades so you can see what we did on Ethereum trades. The trades we have on Surfcoin are up 1,700, Solana is up 4,400, Tron is up 5,900, and on Tron Music it's 2,500. Altogether, that's the total. The account is currently up 22,000 in profit, and we're keeping the trades open. I'll explain later why we're also trading on LBANK. The Bitcoin trade, which I think has been open for about 15 days now, is up 16,000, and today it even went up to 17,000 in profit. Why do I want to keep these trades open? Why do I want to keep them open? Because for now, China and the US have temporarily settled their economic issues, meaning that war. They've suspended the tariffs for 90 days, reduced the restrictions, and this is likely to bring a huge amount of money into the market. The bullish trend will probably continue, so I'm keeping the trades open. It's a great opportunity that you can take advantage of right now. I'll show you on Ripple. Yesterday I told you about Ethereum, today it's Ripple. When the market has a trend, whether it's bullish or bearish, the strategy I'm about to share works incredibly well. Don't miss out on these opportunities. Look, right here, you can launch the banking strategy bot. At first, it appears like this for you. This is the old banking strategy that people are using and everything is great. And this button here activates the super bank strategy, which will show up on your dashboard. For those who don't have the banking strategy, just search banking strategy trading bot on Google and you'll find it. Open the first link and you'll see all the explanations. You can buy it right there from the site. If you don't want to buy from their site, it's a bit more expensive. If you want to buy with Tether, it's a bit cheaper. This purple video, 38 minutes long, which I've put here, definitely watch it after this video for more detailed explanations. I covered Ethereum yesterday, so I won't go into more detail now. Let's get started quickly. From here, where the bullish trend started, we see the bearish correction, and we'll analyze this second bullish trend that we had today together. But according to which strategy? According to the super banking strategy. We want to move forward. I told you the market maker has two indicators. One is the market trend, which is either bullish or bearish, and the other is the decision it makes itself to relieve buying pressure and relieve selling pressure. So if it wants to relieve selling pressure, if it wants to relieve buying pressure, it has to keep placing buy orders. And if it wants to relieve selling pressure, it has to place sell orders. In other words, it acts in the opposite way. To keep things from getting complicated, I drew a matrix and said that it doesn't go beyond these four situations. We assigned each one a horse, gave each a color, and as we proceed, green represents the bullish trend. The bullish trend strategy is green, the ZOG strategy is blue, and the red strategy is, well, red. Now we'll go through each one together, look at examples from each strategy, and then sum up the results from these past few days. Here we have the bullish trend. This line shows the bullish trend. When the line turns red here, it becomes a bearish trend. So that's the trend. We also have some labels, and these labels are placed on the candle close. For example, even in replay mode, you can see that it marks exactly on the candle close without any repainting. When it gives you the close here, that's what it means. This is the strategy that the market maker has decided to implement. Now, this is the algorithm I've written, but it's possible that the market maker might do something else. But considering the results you've seen from my trades over the past few days, don't you think I'm identifying things correctly? That's about this topic. Now you start from here. I'll go through it with you step by step. I'll play a bit of music and then speed things up. But for now, let's go through the first few trades together. Look here, the trend has turned green. You see this lower part, this line that's coming up, and it even draws a greenish color for you. The trend has turned green. Here it placed a red label. When it shows a red label here, what do? You look at the PDF and say, the trend is green, but the label is red. The yellow strategy, you scroll down. What was the yellow strategy? The market maker wants to dump the market, but the trend is still bullish, so you wait for the created level to break. You enter on the close when the level is broken, set your stop on the green line, set your risk to 1, and go. He drew this line for us, the green line. You see it here, the dotted line. You can also draw it yourself. For example, you can draw another line to make it clearer for yourself. You draw something like this. Okay, when this breaks, we enter the trade. Okay, it broke here, it closed above, so we enter the trade here. We enter the trade here and you set your stop on this green line. The green line is here now. You extend your target until your risk-reward ratio becomes 1, meaning equal to the same move we have from our trend line. We want to continue that same move. This is it. It starts moving up. Here comes the next strategy. We'll get to that together in a moment. But look at this trade. The result is that it hits our target here, just like that. In the time it took to reach the target, another trade opportunity was created. That is, here it gave us another signal. This is the same green trend, but the red line is our strategy. On the close of the candle that broke out, you enter the trade on the next candle. Here you close your long position, set your stop on the green line. At that point, the green line was like this. You set your risk-free entry at 1 and go in. The heart of the matter. Here, it hit our target. You see? Exactly where it hits the target is usually around where the next strategy happens, because there are several market-making robots working together, and you need to catch all of them. It would really be a shame not to. I mean, for example, that's where we have a difference now. If you had just caught this one, you could have caught this one too, or even both. Do you have an exchange account, or do you add volume for each one? Meaning, do you open a new trade again? With separate stop and take profit, you keep placing stop limit orders. So you set a stop limit for this one and a stop limit for that one. It's really simple. Or do you have 2 or 3 exchange accounts? Do you have this exchange? How many links are in the caption? I have put up several exchanges and you can use my links, which right now also come with a little bonus, because we're spending our time on this for you and you also benefit from it. Also, these are exchanges that I personally use, so at least you can rest assured about that. That's it for this topic, and this trade was executed. Here again, wait, there was another position given. Let me take a look at it for a moment. Most of the time here, the yellow strategy clearly shows up indicating an upward trend, but it's giving us a red signal. So here, when it gave that signal, it was decided to take one position. The yellow line is quick. For example, we draw it here to make sure that once it breaks, we should enter the trade. So you wait for it to break, right? You don't enter the trade right now. Here, when it breaks, what does that mean exactly? Does it mean the market maker is saying something? I tried to reduce the buying pressure, but the buying pressure was so strong that I just couldn't manage it. I was only able to create this much resistance here, whereas in the previous one, I couldn't create any resistance at all. For example, it was only able to push the price down for about 3 or 4 candles. This shows the strength of the market, and that's why we refer to the size of that move. It moves forward. It's not 100% certain. The market has its own risks. But this is something I'm using. If you like, you can use it too. And if you don't like it, just continue with your own strategy. This is also risky. You enter a position, set your stop, and wait for it to either hit your target or your stop loss. Here, it hits our target, okay? It hit the target here. In the time it was reaching our target, we had another trade here where the strategy triggered again. When the color appeared, we would enter the trade on the next candle. Here, this becomes your stop. You set it down here. It's risky, but you enter your position at 1. Around here, it also hits your target. There was another green strategy signal. Which one was the green signal? The market is in an uptrend. The market maker wants to pump it. So this becomes the green strategy. For the green strategy, you set your stop at the previous low. If the close of the next candle is higher than the close of the current candle, that's the explanation. I've written this in the PDF. In the caption, there are some phone numbers and a Telegram contact. You can message the guys and ask them to send you the PDF. The PDF is free. Look, when it gave you the signal here. And you wait until you get a candle close higher than this one. The candle close higher than this happens. 2 candles. Then here you take a long position and set your stop at the previous low. You don't set your stop there anymore. You set it at the previous low for risk reward. You set your risk reward ratio to 1.5 or 2, for example. If you set your risk reward ratio to 2, it becomes here. It comes and hits your target within 3 or 4 candles. We had a yellow strategy, a smooth profit, but the red one is just like the few we saw, and this green line is drawn by itself. You can also draw the yellow line yourself to make it clearer for you. Here you can see the market tried to push the price down a bit, but it couldn't manage. Here it broke. We enter the trade on the breakout. If this seems complicated to you right now, it's because you haven't practiced enough with the PDA. For example, try doing about 10 trades at this level. If you do 10 trades on demo, you'll get the hang of it and entering will become easy. Look at this part. The recipe re-entered and hit the target. When the market is strong like this, trades reach their outcome faster. You won't get bored waiting. Here, the market maker is clearly aiming to dump the market, and you can sense this risk. You can enter on the next candle. Because it has come and broken through, I won't put all of these in replay mode since the video would get too long. I'm speaking quickly so I don't take up your time. Later, sit down yourself and try a few trades on demo and backtest them. Are you on regular candles as well? I mean, it's not Heikinashi either, so don't say it can't be done without replay mode. Here you go. That's it for this topic. It came and hit your target. In the meantime, as it was hitting the target, it also gave you another trade. If you wanted, you could take all of them, or if you didn't, you could take just some. But my suggestion is to take all of them. For now, in this market situation where money has been poured into the market, you need to collect it. You see here, there's a breakout. You set your risk reward at 1 and just let it hit 30. Again, right here, it just gave another trade. Here's the breakout. You set your stop here and set your risk reward at 1. And with this, you wait until the result becomes clear. Okay, do you think it will hit this target here? No, it hit here. Here, it hits this target. This is our trade. In this gap, there was another trade where you enter the trade here, but you could have taken this one too, though it would have hit the stop. Why? Because it's green. The one behind it is green, and the trend also turns green. For the green strategy, you should enter on the close of the next candle, provided its close is higher. Oh no, it doesn't hit the stop. This one also hits the target. Why? Because here, as I told you, whenever the strategy turns green, you wait until there's a close above the previous close and then you take it, right? I've written it in the PDF. Green strategy. Enter on the close of the next candle provided it is larger than the signal candle. So here, now that it closed, you draw a line. Which one of these is bigger? None of them, none of them, none of them. This one was bigger. This one was bigger, so you enter the trade and this one also hits the target. I was surprised. Why? Did it hit the stop? You set the stop at the previous low, for example, just a bit below the low, just a few pips, a few pips below the previous low, and you set your risk reward at 1.5 or 2. Now here, I set my risk reward at 2. Here, with this setup, we can see that the R comes and hits our target. Here, when it hits our target, it also hits several previous targets. You mean right here? Now, if you wanted to enter a trade here, would you have entered the trade at this point, for example? Would you have entered here? You would have set your stop here, set your risk reward entry at 1, and it would have hit your target. If you wanted to enter here again, you could have entered on this candle, set your stop here, set your risk reward entry at 1, and it would have hit your target. That means when it hit this candle, or if you had 50 trades together, it would hit the target for all of them. So all of these hit the target. Okay, then here it gave another one, but it got tiring and this one hit the stop. This was the last trade it gave us. I think it was a stop, but let me check, because it came here and broke this level. When the distance gets too big, you should start to feel a bit of danger. That means your stop loss becomes very large. Usually that's where the market wants to reverse. Now this is also a sign to help you identify where the market might turn around, when the candle gets too far from the trend line. This kind of situation happens. The guy has already hit 20 targets, so just give the market one stop loss too. Let the kids have some fun. You buy a house, you pay a little commission, a little fee. That's just how it is. This is the green trend line, that's green too, so you wait. You have to wait for a close above this line and then you enter the trade around here. Now this is the red strategy. Look at its color. I forgot, the bullish trend line is red and the strategy is yellow, so you have to wait for it to break this line before you enter the trade. It still hasn't broken, hasn't broken, hasn't broken. You see, it still hasn't managed to break this line upwards and it hasn't broken. For now, it hasn't been able to break. Here, it broke, but for now, it can't break. This market maker has managed to act successfully a bit, so when it happens like this, it means the trend is likely to turn bearish. Previously, you would see that within just 1 or 2 candles, the market maker couldn't manage it and the trend would reverse. Now, it's holding well, so now we're entering a trade, according to our strategy. But all of this is a sign that the market is probably going to calm down a bit from here and then we'll move on. Let's see what happens here. It hit our target. In the meantime, we had 2 or 3 other trades as well. Different strategies. For example, this was a target again, this was a target, this was a target, and this was a target. You can catch all of these yourself. If I go through them all, it would get too long, the video. Now, for example, this is the next type of strategy, which is green. The trend is green. I told you, green on green, this is how you enter the trade. You have to wait until it gives a close above this. Use that. You set the local low, adjust your risk to reward, it comes to 2, and then it hits the target. This one is the same as the previous strategy, the one for... I've explained all of them. In this situation, I haven't told you about any other strategy yet, meaning it hasn't come up in the market. But if it does come up, I'll let you know. This is another yellow strategy that appeared and hit your target. You just keep going like this, and all of these are hitting their targets. Now, I'm not sure about this one. Did it hit the target or not? But these ones did. It came, broke this line, and the trend turned red. Do you see the trend here? It turned red, and from here on, the trend is red. Now you enter this part of the story. That is a red trend or a blue or red strategy, which now depends on whether it gives a green or red signal. The market would act accordingly. You make your decision. For example, here it gave a green signal. It's red, but it gave a green signal. The trend is downward, but it gave a green signal. Blue strategy. Blue strategy. The opposite of what you just did, it's the same, but with a downward trend, and you wait for a breakout to the downside, set your stop. You set your stop loss above. Adjust your risk reward to 1 and go for your target. That means here, the trend is downward. You wait to see if the market maker can bring it down or not. Here, since it couldn't bring it down, you take the breakout, set your stop loss above, and adjust your risk reward to set it to 1. You see what happens. Either you hit your target or your stop loss. If you hit your stop, you endure it. Or since you've been hitting so many targets, you just... Let's see what happens. What happens? Now, in the meantime, we'll go through the rest of the strategies one by one together. For now, nothing has happened. Now, does it turn completely red here? A red strategy means that during this period, you take another trade and it turns completely red. Red strategy. You set the stop above the highs and you set the risk reward to 2. If there was a breakout with a close, you set the stop above the highs of the risk reward bar and set it to 2. Now maybe it hits 1.5 for you, but if you get stopped out at 2, it's okay. This trade is still open. You got stopped out on this one. This is the same strategy I just explained. You enter on the close of the next candle, set the stop above the highs, and set the risk reward to 2. Do you set it up like this? You easily hit the target on this one. Here, the strategy I just mentioned is to wait until it closes below, then you enter the trade. Here's another trade that hasn't hit stop loss or target yet. So, should we wait and see what happens with these? The result during this period. Other trades. It's giving you these, meaning you can catch all of these moves where it came down like this and the trade hit the target. Now this one is hitting stop loss, but that's not important. So far we've had 2 stop losses and 1 target hit in this downtrend, but stay calm. It's important because here you've hit 20 targets, so have patience. Here, it hit our stop loss, here it hit this stop loss, and then it starts. The trend turned bullish again, the trend turned bullish again, and the result was clear. So the downtrend wasn't working anymore because the downtrend basically broke even for us. We had 2 stop losses and 2 targets hit. That wasn't very beneficial for us. But then the trend turned bullish again. This strategy starts working again. That's why I say, as long as the market is hot, stick to it, use this. I showed that I'm up 22,000 in profit. Maybe you can't make that in a whole year, but you can make it in a week. With these same simple strategies. Here, you just come in, set your stop loss and get in. On this green line, you set the risk reward to 1, and then you go here. And again, in the same way, you enter on the close of the candle that breaks. Set your stop loss below, set the risk reward to 1. And you enter. If it's hard for you to tell which strategy this is right now, you can check the PDF. That's exactly why the PDF was made. So you can also take some notes. Now you see this one hit its target, this one hit its target in this case. In this interval, it gave us another trade as well, and this one also hits its target. When the market trend is positive, you can see what kind of candles it forms. For example, it forms a candle and then you realize which direction the market wants to go. Here it comes and hits the target. Again, the same thing happens here. It comes here and it hits the target and just keeps going on its own like that. I'm just going to quickly explain these in a very general way so I don't take up your time and you can get started sooner. So I'll remove this and let's see how far we've gotten. We've seen up to here. Now the last trade it gave me is this one. It came and broke this level, and on the close of the next candle you can enter. You set your stop here, set your risk reward to 1, and that's it. You wait around here to see if it hits the stop or the target, but for the overall result, you should calculate it yourself. Do a quick calculation. We were amazed yesterday with Ethereum. I said today, with Ripple, the market is bullish, is the same for everything. For example, let me give you 4 more examples. Here, 4. Like today, what's bullish has been really good. For example, I think Pepe and Dogecoin are exploding. Look at Floki. Should I say Floki? Look at Floki. You see all of them. You could have used those same strategies. Even this one was bullish. The green strategy was also bullish. It's that easy to get the job done, you see. Honestly, I don't spend much time on this anymore because I really don't want to lose trader. Thanks for your time. If you support me with a like, a comment, a kind word, or a thumbs up, I appreciate it. Have a great day.